Today's Monday, November the 8th, and I'm going to try to make this really quick, but I am going to talk about SAVA because I did place a trade today. I did do a long call spread in December, and I'm going to explain what prices were and why. But I want to do just a quick recap and start with the McClellan oscillator chopping here in the middle of overbought and neutral. Okay, that's the first thing, chopping. So the bulls are able to hold this up, but there is pressure by the bears. The summation index, meanwhile, continues to climb. And if you'll remember the PowerPoint that I showed you or that I ran maybe a couple of weeks ago, I've now overlaid the old one with the new one. So I'm sorry this is blurry, but remember I'm overlaying this on top of the old one. And I was showing the relationship between these valleys and when the market responded with a drop. Here's an example here. So here's a valley in the summation index, and here is a drop right here in the S&P. And I took all of those arrow lengths and I looked at them and I thought, well, maybe this would be the average. So I stuck this average onto the end of the last valley, and it just hits today, which means that, if the theory is right, there is a drop coming, and it's a drop that's going to follow this pattern of a dip in the McClellan summation index is followed up by a drop in the market somewhere in this range of the number of days. And that would be, this indicates right about now. So take it for what it's worth. Now let's look at the charts, because the charts are important. The Dow Jones still making new highs, but starting to reach this 127.2 on this Fibonacci that I chose, which is above this gap to this peak here. And there was a pullback to 68.2, and then it moved up, and then it pulled back to 78.2. And so I'm thinking that's a reasonable Fibonacci that other eyes might be looking at as well. The NASDAQ is reaching 138.2. That's based on a different Fibonacci. That's from this low to this high, because we didn't have the type of gap that we saw in the Dow Jones. I tried to see what other points fit by moving this one. Let's get rid of that. Moving this point around and finding different ones. I just settled on this one, and we're reaching 138.2. It's really moving high now above its 50 moving average. The S&P above 138.2. Didn't play around a long time with this, so it's not really reaching an important Fibonacci level on this particular set, which aren't very good because we don't have any test of a good Fibonacci line. So we'd have to move these and try to find out what other Fibonaccis are in play. Now there's two double bottoms. That could be one, but I'm not going to comment on that now. The volatility index did move up just a little bit. SAVA CAT exploded today. CAT up $8.37. This is the infrastructure bill. Remember what I was saying? I was accumulating Caterpillar. That was because I thought the infrastructure bill would pass eventually. And now we've got the Chiku span that has moved up through minimum resistance. And we have this lovely breakout here. And we have the stochastics that show that there's still a little bit more to run on the upside. But the stock that we've been following for the last 4 days now is SAVA. And here's SAVA on a daily, where it finished, it opened just at the cloud and then fell below. But what's important here, don't want that. What's important today when I was looking at daily activity is that we saw this test here of the 78.6, and a nice test it was, and then it went back up again. So I looked at the 5-minute chart, and I saw the 5-minute chart. This is the first 15 minutes. Okay, this is what I look at to see what the high and low is for the first 15 minutes. Didn't turn out to be important today, so let's get rid of it. But we did see the day. Here's the open, and we popped up in the pre-market, dropped and we tested the pivot point for about 15 minutes, and we stayed at the pivot point. So I thought that this retest of the pivot point would be a good time to jump into some calls, and I took 5 long December 95, short December 105, and I paid $335 for them. So my maximum loss is going to be around $1,600 if I hold this to expiration, which I won't. I'm going to get out of this. I'm going to set a maximum loss here of about $500 to $750, and once I've hit that, I'm going to get out. I'm going to look for other things. I'm going to look particularly at the daily, of course, and if it can't break through the cloud and the Chico span can't get up here in the next 2 or 3 days, and we start looking like we're going to drift in the cloud, then I'm going to bail on this position, and I'm going to lose, and I'll wait to get back in again. But I wasn't risking with more stock. I'm setting a floor for my loss at that $1,600, and paid $335 for a $10 spread, so $6.65, or $665 per contract is going to be my profit. And the stochastic momentum indicators are saying that we're still in the upward phase of movement.